Hi and welcome to Random Rogers Big Picture for the week of July 8th. Special Tour de France edition, as Bob Roll might say. If you missed it, and it'd be easy to miss based on how little coverage the Versus channel, if you even know what that is, has given to the Tour de France, it starts Saturday morning, bright and early. A chance for you to check out some of your favorite riders: Heimar Zubeldia, Georg Toknik, Jorg Yaks, Xabier Zandia, and the rest of your favorites. On to this week's video topic. I mentioned on a blog post in passing Statoil. If you've been reading the blog for a while, you know it's been a long-term holding, largest company in Norway, pretty good proxy for the price of oil. If I didn't just say it a second ago, long-term holding, going to be something I hold on to for quite a while. In mentioning it in a blog post, I had occasion to look at a longish term chart and kind of be reminded of something about a little perspective about giving a stock time to do its thing to add value. The stock, and actually I'm looking at a chart here that I will post into the blog underneath where the video goes. But I first bought the stock in the spring of 2005 sometime, in the 14s. And since then, it has really been a volatile ride. I sold some about a little over a year ago in April, late April. It had a big spike up, or maybe it peaked out in May. It peaked out in the mid 34s. I sold some in the I think it was in the mid 33s. If you care, you can look. April 24th or 25th, there's a blog post, something about shaving kit or haircut, something like that, that you can look at that gives the details if you really care. But if you look at down below at the chart that I've pasted, you'll see that in some periods it's had fantastic returns up, and in other periods here, you know, we're talking 2, 3, 4 months at a time, it's had just a horrible downward decline. I expect more of that in the future. In looking at this 2-year chart, you'll notice a couple of things. One, the stock in 2 years, so going back to, I guess, July of 05, is up 50%. That compares to the green line, which is the S&P 500, which is up a little less than 30%, and it's dramatically outperformed the Oslo listing of the stocks, of the ordinary shares as they're traded in Oslo in kroners. The Oslo listing is only up, it's about 30%. Big lag, and the reason for that obviously is the extent to which the dollar has gotten weaker against the Norwegian crown. So through all of this volatility, and the chart should look volatile to you, through all of this volatility, it's pretty clear, though, that the stock has pretty much followed oil. Given time, it's done quite well. The thing that's probably not captured on the chart is the dividend yield. Statoil pays a different dividend every year. It seems like every time that, and I've been in for 3 dividends now, it's been close to 5%, maybe 4% of whatever the price was at the time. This year's dividend was something like $1.52 a share, and then less whatever you pay in taxes, ADR fee, and all of that business. But it's been a fantastic performer. Don't know what's going to happen in the future as far as if it keeps going up. It's a safe bet that it'll continue to follow oil. It's very unhedged to the price of oil. Over time, I think it works its way higher, but the bottom line here, the reason to even talk about it, is it's a proxy stock. A lot of the stocks that I own are proxies for something. Whatever Norway does, Statoil is going to do. Whatever oil does, Statoil is going to do. And if you give it time and have some patience, and that's kind of the point here, it probably, most stocks work out. They may not be the best single thing you can find, but most names do work out. And an important point here also is, the lift, and I'm going to say, despite the volatility, which has been extreme, it has given accounts a lift. The lift given, it would have been easy to panic out at absolutely the wrong time, wrong thing to do, but the lift given, I don't think could have been captured if there was some sort of Norway fund that I might have otherwise invested in. Chances are the yield would have been less, and I just doubt that it would have been up as much as the stock. If you want, there are some countries like this where you've got one or two stocks that represent a huge portion of the index, and it seems like often you're better off just going with the name if you're even interested in that country. Maybe you shouldn't own Norway. I don't know. But it remains an important theme for me. Hopefully that makes sense. Hopefully you enjoy the Tour de France, and have a good weekend.